coming to you on another AMC video, and I was gonna say we are a video on talking slow and not skipping class. Sort of like trades. I'm trying to do the opposite, but a little bit in the way. Okay, one thing I have to say is the failure to deliver is like a big huge thing. It's like a red flag. Wow, this is nuts. And we have seen the on loan going upwards, and the max costs have it was like Thursday went up to 186. So you're seeing a lot of craziness onto AMC. Well, this is one thing that I have to say. We have to go back to last year and look at this. The failure to deliver. Boom, 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 boom. And we're gonna go slide it over if I can do that again. And I don't know why I do not like it when it does that. It just starts. They have like a little glitch in there. And you can see the failure to deliver goes down, and it just shoots up. And it shoots up, and then you can see the failure to deliver shoots up even more. The on loan goes down. So this is one thing that we're going to see probably next week. I'm hoping we're going to see a higher, it's going to keep on going higher and higher, but look at that. That is nuts. Now let's go over to modern day. Sorry, I'm flicking through this really hard because it's not, and you can see it's just consolidating. Failure to deliver, high, and then it goes up. The failure to deliver, the data we will see, it's going to take about, I think it's 2 weeks, so it's every 2 weeks in a month. So they only drop it every 2 times a month. So we don't know what the failure to deliver was yesterday, for instance, because the government won't release it. This is where it gets in the gray areas, because the failure delivers are used in multiple ways, and this is what a lot of people think automatically is naked shorting. And yeah, but there is another purpose onto why they have failure delivers. Is failure delivers are used onto, let's see if I can get that. The failure delivers are used onto option trading, and once they have the failure delivers on option tradings, well, say for instance you put one call in, that is 100 shares. So the market makers need to go out and to find 100 shares for one call. So when a call does get in the money and they ask for their 100 shares, well, the market makers have to go out and provide them that contract, because that was the contract that they have. Oh, I can hear my son talking in the background. So sorry about that. Okay, buddy. And the market makers have to provide 100 shares. Well, if they don't have that within, I believe it's 3 business days, they have to provide it within 3 business days. It's a failure to deliver. So once they don't have those shares for 3 business days, they have to, business days, they have up to 30 days basically to provide the shares. So they have up to 30 business days. And why I'm bringing this up, because you're probably like, okay, cool, that's not really making sense to me. Why are you even talking about that? But the failure to delivers onto those can go into how much shares are on loan. So this is where you go into shares on loan. You can see the shares on loan are always a lot more higher than the shorts, how much they have shorting. So a lot of times there's not the shares on loan, and they used to have in here, you could take I guess put in a comment on here, you used to have where you can find the shares on loan onto what is borrowed onto the loan. And this is the free float on loan. Well, what's happening is the shares on loan, you can see this is another thing, it's going down. It's going down. Well, why is that going down? Because they're using the shares on loan to give those shares to the people that are failure to deliver. So everyone thinks it's naked shorting, but it could be that there's so many options that were in the call. There's so many people buying shares. They have ran out of shares. They can't provide it. They can't locate those shares. And what happens? They take it out of shares on loan. Well, the shares on loan, they yank it out of the market. Well, the market makers have up to 30 days. Now there is a little catch to this little, the little catch on the market makers have 30 days, and they can do is sell it to another market maker. It doesn't say you can't do that. Well, if they sell it to another market maker, well, guess what? They have another 30 more days. And guess what? It's a loop. They can keep on doing that. Sell it to another market maker. Got another additional 30 more days. Another loop. And just keep on doing that. And until they got two options to give to the person who bought those shares, or a short who is shorting the market on AMC. And that is, one, they can borrow, the market makers can borrow those shares, or to find the shares. And how quickly you can find the shares? Well, you can borrow the shares easily, is right here. You can basically borrow those shares. So failure to deliver is not 100% naked shorting. And this is where it gets really into, it's just a broad of data. And you're taking all this broad of data and you're looking at it and you're like, well, there's something going on in there. There's something happening that we're seeing. It doesn't make sense, because failure to deliver doesn't mean, it's not a common thing. Let's look at Apple. Apple is one of the biggest market maker, or one of the biggest, I can't even remember the ticker symbol. Apple is one of the biggest stocks out there, and we should see a failure to deliver very, very high. But I guarantee the failure to deliver, look at the failure to deliver, is going to be very, very low. And you can see failure to deliver is very, very low. Let's zoom in. It's very, very low, failure to deliver. And Apple is one of the biggest trading stocks out there. Now, is there a lot of people naked shorting this? I don't really think so. And the cost to borrow onto this is dirt cheap. Well, the short score is really, really cheap, or it's really, really low. So technically, this is a prime company that if you think that the market's going to go down, this is the company that you want to short. I'm just being blunt. This is the company you want to short, because it is a short. It's following the S&P 500 hardcore, and you can basically short this and watch it go down. That just amazes me. But the shares on loan is not much when you have a max cost of a huge amount of. AMC has one of the highest shares on loan, and that is crazy, because it's not a big company. It's not a really big company. So yeah, I'm excited. Let's keep in mind. Let's look at the daily chart. we see here, this is the 5-minute candle. We're looking at the 5-minute. At the end, you see it go boost. It's just popping up here, and it's popping up crazy, but it had a negative B, meaning it's going into a negative territory. It's pushing it downwards. We have in the box trend, I love doing this stuff because of once it breaks over the 1540, we're going to see it's going to shoot up, and I would say we have to break through the 16. Once we shoot up through the 16, I would say it's going to go up to almost 1750 to almost 18. So we need a couple of these barriers to go through. Once we go through those barriers, it's going to go nuts, I would say. This is another thing that no one I have even talking about this, but look at this. How much volume, buying pressure. This is a huge buying pressure. Huge. There's like tons of people buying into it, and look at how little this is going. It didn't go at all. So it tells me, one, this was a big failure to deliver. Again, another failure to deliver. They are going to probably put that back maybe Monday, and they're holding those shares. So I think there was a huge hedge fund or a huge company, somebody was buying a lot of options, and they were failing to deliver. They were not bringing it out to the market. They were just, the volume was huge. Take a look at the volume over here into the volume over here. This is insane. You'd see the volume dropping down, and it's not that much of a selling pressure. Look at the selling pressure, not much. The buying pressure here, huge, huge, and it didn't go hardly anywhere. Look at that, just nothing. So they are naked shorting. I wouldn't say naked shorting, but they were shorting it at the same time. So that was shorting very, very hard, and the buyers were buying it very, very, very hard at the same time, or the failure to deliver was happening at the same time. Next week, we're having GameStop coming out, and I believe GameStop is talking about doing that the split then, to having for one share they get 4 shares, and then they have dividends on top of that. This could be a huge thing as well. A lot of people could be really excited about this. I'm very excited about seeing this as well, because we're going to see AMC pretty much push up with GameStop. I think AMC is behind GameStop, because GameStop, it's one or the other. One's pushing the other one up, the other one's pushing the other one up. It's one. And right now, AMC is not having the push. GameStop is having the push going up. So we're seeing a good, just keeps on consolidating. The volume is not there, and let's look at Max Payne. I never even looked at Max Payne for next year, or not next year, next week. Seems like next year. Oh my gosh. Let's go to the Greeks, and we're gonna see Max Payne. That was this week. Max Payne is at 1450. So that went down lower and goes lower. We have a Max Payne at 16. Keep in mind too, the Max Payne will vary every single week. It goes up or down. So we could see it having a Max Payne. I've seen Max Payne's starting off with 20, and then it lowered it down to 17 within a day. That could be the direct opposite too. Max Payne going from 15, we could see it Max Payne going up to 20. Is it a coincidence? Max Payne is really of a good indication that what the market makers want that to go at. The market makers wanted to drive Max Payne to 15 and keep at 15. And, well, guess what? We were at 15, pretty close to it. And market makers right here at 1450. So Are we going to see 1450? Yeah, we might drop it then a little bit. I don't see it. I just don't see the option market next week is not that big, and I was sort of hoping for a bigger option market for next week. So let's see what happens. Definitely I'm definitely bearish on the market, but I'm definitely bullish on AMC. And we had some good green candles here, so that's great indication that we're seeing something that's going to move up. Let's be the negative side and a little bit bearish onto AMC, but let's say if it breaks through 1476 around there, we're going to see AMC drop down to 1430, 14, and it could even drop down to 13 as well, around there. So we are having a high tip here, but keep in mind they can start shortening it down and then break through this line. When they break through that line, we're going to have a hard time to break it back up. That said, I'm hoping you liked the video. Definitely like, subscribe, and share. I really appreciate it. Peace out.